What is the difference for you between running a business bootstrapped and venture backed, if anything?
Not a lot. You're always obsessing over cash flow, always, and burn rate, and other things. I think with venture backed, you have this term called burn rate. That in a bootstrap company, we just call that cash flow.
Negative
that
cash
little
flow.
language shift is like,
Yeah.
especially like my agency, we had about 110, 120 employees when I sold it. So like they're like service businesses are great cash machines if you run them well, right? Which is ultimately what we were part of a roll up into this bigger agency that is now called Bounteous, which is funny. It just got sold again,
Yeah.
right? 3 years later. So, I think the key thing with venture backed, at least from our perspective, we still run it like a bootstrap business. We're really capital efficient. So for people listening, like there's all kinds of information out there on how to raise money and how like valuations and how much you should dilute. Right at this point, we've done one round and one extension of the round, and we've only sold about 20% of the company to investors. So we as founders still own 80% of this company and are still very much in control, right? We're going to do another round here shortly. Same idea. Like we work
Sure.
backwards from this like very small dilution target. Are we going to get the amount we need to continue like on whatever strategy, whatever we're trying to build? And that's it, right? So not a lot different. It's a little different. And like when you have institutional investors, you have a board, right? You've always had fiduciary responsibility. Like Austin, you are an entrepreneur. You have fiduciary responsibility to you as the shareholder, right? Yep. I have fiduciary responsibility to me as the shareholder, but also other people as shareholders. That's the only mindset thing for me.